Okay, guys, thank you for participating in the channel, helping out. That's exactly like what we need to see. Um, like when people ask repetitive questions, like knowing where to get the answer right for them. Take I put a lot of effort into answering the questions, so you guys are really helpful, as well as just wanting to reward good behavior in the chat. It fosters a really good environment. You guys basically spearhead the whole thing, which is great because like when Kim came on, we have maybe basically every single person except for Kachao was from Blaze, which is really good to see. But you know, even the people at the Vanguard level who are just active members, I want to make sure that they're getting something out of this as well. Just what it was really interesting is that there's a statistic that I've kind of understood now that is really interesting. From 24,000 Twitter followers, we had, I think, with the super followers, and I've gifted people it. I've given people access like through contests or whatever. About 1% of people actually sign up for the Discord with $10 buy-in, which is essentially free. And that's really interesting because even within that 1% of 24,000 individuals, minus the bots, whatever, we have less than 1% of those people actually being active and engaged in the Discord. And that might be shocking to you because, everybody says they want it, right? But here you have an opportunity actually to pick up some really advanced knowledge from a considerate source. And so I definitely want to reward you guys because my initial ambition was like, hey, let's make this really accessible for people so that, like, let's say I answer, Big Mac's question, right? And I write them out full detail. If we have more people in here, more people are going to absorb that knowledge. But what I'm consistently finding is that only a select few are actually engaging like really with the actual opportunity. So we must shift our approach from the quantity approach to quality approach because I want to make sure that people are properly rewarded for the effort they put in. In any case, I had some really interesting kind of insights this week, and after that we'll kind of open up the floor to more discussion in a more of a group setting. It won't just be me talking. And the first one was in the Blaze calls, I'm consistently seeing certain themes, but two things were quite different. One of them was a guy who was optimizing his system, right? So he had his base system, and he's optimizing his system, and he basically started introducing like an ad. His base system is profitable. We know that it's going to make money. Introduces the ad and thought he was properly improving his statistics. Marginal increase. Okay, so he's going from he's gaining basically 0.3 to 0.5 reward on average, right? But his win rate significantly drops. And he was telling me like, hey, I'm going through this process of trying to optimize it. I look at the numbers immediately. I say like, this is a red flag. I said, are you sure this is improving your system? And he said, I'm tracking it side by side. Like I see the original system, I see this one. It seems to be working out. But when we went and evaluated again, I plugged that into the curve simulator, and turns out by optimizing his system, he has decreased the potential by more than 50%. So if you think about like taking 100 trades and you would have made $10,000, now all of a sudden you would make $5,000 by quote optimizing your system. Less than that actually. So I want you guys to really reflect on like over optimization, and it's always going to be a problem because number one, you're always seeing people saying like, you can improve this trade or you can keep adding to it, whatever. Or you see me doing these things, right? But I've constantly come out and said, you can over optimize at many points. Like in the previous years, I have been over optimized to the point where not adding in to that base system would have been, number one, and most importantly, less stressful because you have to manage it a lot less. But number two, actually would have been outperforming on the whole. Like, I understand that you want to optimize things and like push it to the next level and all that, but that is really kind of a luxury in terms of trading. And what you actually need to do is be focused on the consistency. What I notice is amongst these people who are aiming to optimize their systems, they have not even reached a consistency to the point where they're actually able to, basically quit their full-time job and trade full-time, right? And when I'm telling you, you have the statistics, or if you can prove to yourself through your average win-loss ratio and win rate that you have a system that will produce profits in the long run, you need to trade that and not be so eager to push things, because you can fall into these, very deep and dark places where you incorporate extra stress and you actually destroy the potential of your own system. Like these things, when I did it very carefully. It took me years to take the next step, and that is a good thing. Like if you cannot say to yourself like, I can afford not to make money for the next, however long I'm going to run this optimized system, then don't do it, because you're just shooting yourself in the foot. Okay. Second thing was being under optimized. So I have another trader who is trading a strategy that he has back tested, or at least he has a decent idea of like the metrics and whatnot, and he has a system, he has a focus, he's not discovering his edge or whatever anymore. He is under risking on these trades, and that's something that I don't think I've ever touched upon. But like, how we say, oh yeah, you can pay the tuition, whatever you want to learn from the market while you're discovering yourself. In his case, he's risking like far below 1% of his capital, and it's not actually really doing him any favors. And the reason why is because when it comes down to like potential rewards, right, for doing well, and negative punishment for doing poorly, it is a lie to say that P&L doesn't matter. And you know how I mentioned in one of these comments before, like, oh, I don't punish myself and I don't reward myself necessarily. Like the process is reward enough. Well, when you're under risking on trades, especially when you kind of like know what your focus is, and you're not just like in the learning stage, right? That's when you actually do want to get up to that proper risk, like get to that 1% and trade that, because like when you make R's, right, it feels good, like you're growing, even if like it's really silly. I mean, here's a perfect example is like this year when I started taking drawdown, and I took a pretty steep drawdown. Literally the moment that I even had a green day for like 1 or 2 hours, I started feeling growth again. Like that reward mechanism, like feeling like you're getting better, is baked into the compounding. As you get bigger, or as you have green days, you start having 1 or 2 extra dollars, whatever, $10, $20 extra here. That signals to you that you're doing something, acting in accordance to like what path you want to tread and getting closer to your goal. And same deal when you start losing, you start feeling that more, and like you're more pissed and you want to correct those mistakes. So don't fall into that camp necessarily where you're under risking if like what your focus is. That is a big deal, and I don't think I've ever touched on that. So I wanted to just highlight those 2 things. So I want to open up the floor to whoever wants to kind of discuss something, basically whatever you're going through right now, or like whatever you want to talk about, really. This is basically for you guys. So it's completely custom to you, and you can just go ahead and order. Yeah, don't unmute yet. Same deal like with Kim. Let's I'm looking at the roundtable chat. Okay, so we'll just go first come first serve. Just post something. All right. Okay, Gabriel, you want to go ahead? You want to go, Matt? Matt didn't. I don't think Matthew was not like raising his hand necessarily. He was just in agreement, so you can go ahead.
Hey Brian.
Yeah.
So it's interesting, like you just said this first thing, like the first realization you had, but like I was studying today and like I know I'm kind of different from like the short trading small cap perspective. I was actually even thinking about this today, where like there's no such thing as good as mean reversion futures wise in small caps. Like no, it's kind of the other way around. Like I can't go for high risk, high reward on futures because there's no such thing as like a change in valuation so fast, aside from like a font perspective. But like in the trend following thing, I was reading about like this both at Sequoia and the Turtle Traders about like how their edge wasn't in the timing itself and was on the trade management. So like when I was thinking about it and you just said that, I think I caught myself a little bit confused, like because their edge was on adding a lot to winners and not necessarily in riding those winners. And not necessarily from like just riding them with like normal size. So, where's the line in that, right? So, because the turtle traders were like adding up to have like triple their normal size on a winner, they were making a lot more money and they were just beginning. And if they weren't doing that, they would actually broke even or even have losses. So I want to know what's the line between that, you know?
Yeah, good question. So you can essentially engineer your profitability. Like this is why I don't know if it really connected with you guys, but with um with David Sun, the guy who was on Travel Traders that I did an interview with, and he's also in here as well. You can always message him. I think he's a very friendly guy. His whole strategy really revolves around engineering like profitability, just from the math perspective. Like when I tell you about this equity curve sim, right? If you can essentially create the stats that lead to profitability, then you don't actually need like to execute some grand scheme or some grand strategy. Like it does come down to the trade management, because like ultimately what we're trying to achieve is how can I get that average win and average loss ratio to win rate, balanced to the point where like that makes money. And effectively what they do is, because they're engineering big wins, right? It doesn't matter if they will take a loss here and there, because or even just take multiple losses, because they know that payout is coming whenever that trend hits. And that's a completely viable thing to do, although I will say, like, their time horizon is a little bit bigger, so they have more room to play with. The smaller of a time limit you have on your trading, like if you're scalping, it's really much harder to add into those trades unless you're like super quick. And so that's where I would be very cautious. But I will say, in terms of the future side, you have the ability, because of the liquidity, to put on those positions that engineer those trades. So like definitely it's a viable way to make money in futures, because you're such a small fish in a big pond, and you're not going to move the market, and the slippage is not really there exactly. So I wouldn't say that it's a bad thing to go for that like as your edge. And like you'll see exactly in my Chat with Traders interview, which is also why David even like reached out with me, was because he said like, here's a guy who answered the question like, what is your edge? And I said, my edge is basically that, I know what it takes to be profitable. I didn't. This is not like verbatim, but how I would say it now is like, my edge is more in like how I am cognizant of these stats, and like I use them to create profitability. And so like with that understanding, I just reverse engineer that onto the strategy. So as long as you kind of identify the things that are important to day traders, which is liquidity, range, it's got to be in play, etc. Like once you have those conditions, as long as liquidity permits, if you find a way to create those stats in make that a strategy for yourself, like within what the possibility of that price action, then that's a completely valid way to trade and make money. The reason why I'm always like so critical on the small cap space is because like people trade so very obviously erroneously, in terms of like, hey, I take the profits too soon. Like it's always going to go a bit more than where people think it will go. There's ways to optimize that. It's usually, the range is there to like really take advantage of. So, don't be afraid to approach the market from like from that perspective, like how you manage those trades and like how you create opportunities for yourself, knowing like how profitability is created, especially in like a different type of market. Like, you have completely different variables. Does that make sense?
Yeah, yeah, it does. Like, I was just thinking about this because, like, you know my system, right? Like, I tried to do some fitting to not get chopped down for a lot, like I did. But the bigger picture of it is that I was trying to pick big moves from a trend. And like, even if I just added into 1 hour gains, like I just put like half an hour risk before I got to 1 hour, and then I complete my position after I got to 1 hour, the results would be like so much better. Obviously, I'm just saying the backtest of all that sharpness that you saw before, but like the point I'm saying is like the other guy I speak with like basically every day, he was having the same problem, the exact same problem I was having, and he just we were just talking about that. Like if he just put a starter uh in their position, many of his losses would be like mitigated to half an hour or maybe even less than that, like a third of an hour or something. And he kept adding to it, so like he would lose maybe 2 hour on big profits, but like the results would be so good. So like we were speaking about if that was over optimizing or not, but it seems like it's not, right? So
No, I mean, there's you should. So the what it should do is just should be reflected in your stats. So like you backtest the thing, it looks promising. The difference between you and potentially the other person I talked to was like his stats like absolutely were worse. And that is just because like he traded enough to kind of get that data. If you if you trade that for yourself consistently and you like come up with the stats and like you can compare it, that'll be like the strongest case for like, oh yeah, this actually works. So I always want to make sure that people can be consistent without using these kind of tactics, but like I never said anything about how starters and confirmation are over optimized. Like starters and confirmation is basically the way I see that should be built out like from the start. And so like a confirmation is basically an ad, and to the degree that you add to your trade should basically be optimized to the point where it's like my new stop, or that like when I build in my position from that confirmation, uh my stop holds and I produce like the stat line that makes me profitable. So it's not over optimization. It's basically what I would say to do. Like some people, they just one shot it in, and that definitely works. But like using starters has like numerous benefits. One of which being that when you take smaller losses, actually that feeds into your average loss like getting reduced, which has a really like positive benefit to your risk reward relationship. Like we discussed before, if you reduce your average loss from 1 to like zero point 0.9 or zero point 0.8, like once you do the dividing from your average winner, it's going to be like very big impact. So that will actually really affect your curve, and so I think it's worth it to use it. Okay, so let's have Matthew come on the mic.
What's up?
Yo, yo.
Hey. All right, so there's two things that come to mind. One is something I wrote in the questions or discussions or something recently, and that's about how clear are you about your system. And it actually something that recently opened my eyes was I asked Lucky if he would build out a sheet on Excel that would give me a chart of my results versus system results. So like whenever I'm using my discretion versus system. Why that's super important because the thing that helped me like really start trending upward in my overall P&L chart was whenever I switched, which this came from Brian, whenever I switched from discretion around my system to being 100% systematic, and I did that for 6 months. And that absolutely skyrocketed results because then you have to be really, really clear on what exactly you're doing. And so that's to say this. I realized that even right now, I wasn't super, super clear on every single variable of my system. Because once I had him build out that chart, I said, okay, I'm going to have every single ticker that the system would trade. And what tickers did I, on my discretion, skipped that were actually system plays? I did that, and also I did what exactly is the entry criteria, obviously the add criteria, and just one main exit criteria with one trail. If you can't do that, then you really don't have a system. If you can't say, here's my entry, here's my add, here's my exit criteria, and at the end of the day know exactly what the result of your system was, you really don't have a system. And so I would encourage each of you guys to do that. Go, and I typed in the chat, how I think about it is you versus system. Get really clear about what your system is and get really clear about how well you're performing to your system. And it's kind of a reiteration of what I already knew and went through, that once I got really clear about just executing my system, and then refining what I didn't like about it rather than using so much discretion all the time, that's when everything's really started progressing. So I would challenge you guys tonight, if you haven't already, see if you can make 100% black and white rules on the tickers you traded today or this week on how they would have been executed with your system. And you'll find out you probably have gaps in it. So be super clear on that. The second thing that I was just interested in saying something about is a stark difference from 2021 and 2020. In 2020, 2021, the baseline was like, okay, you better have at least 3R on this. And in fact, I had a good year in 2021, and my win rate, it was kind of funny. And Brian and I would tease each other about this, is because we would both fluctuate between like 25 and 33% win rate. You could do that because the ranges were better and the reward was better. But now I have unintentionally dropped my reward like quite a bit, and I'm okay with it. In fact, my P&L curve is really pretty smooth. I think Brian even mentioned that he was up 100% over like a 2 month period or whatever. And I guarantee it, I kind of doubt that his win rate is above 3, or his risk reward is above 3 right now. I could be wrong. But right now in this market, you don't have to have a 3-to-1 risk reward. You really don't. And if you are, you're probably not going to be getting very many results. And especially as somebody that's building a system, you want to have a lot of results and you want to be able to fail often. Then there comes an equilibrium point where it's like a tipping scale where you want to find out what the best plays are and start digressing. But especially early on, for probably 80 or 90% of people in the room, you want to have a lot of results to learn faster. But I say that to say this: 3-to-1 is not necessary if you're shorting small caps right now. It's really not. I noticed that I could not have imagined my win rate being as high as it is right now. But I also couldn't have imagined my risk reward being low. Like my average risk reward right now is just above 2. It's just above 2 in the past 3 months. And I haven't done that purposely. I've done it because that's what the charts are giving me: a high win rate and like a really median risk reward. And so instead of trying to shove 3-to-1 risk reward down the throat, that's ideal. 3-to-1 risk reward is like premium. It's like the gold standard. But if this market's not going to give you that, which is not, I would say shift your focus to the chart rather than having to force 3-to-1. And one of the specific things that I do is I accept if my base entry gives me a 2-to-1 risk reward, then that's to my base target level, my foundation target level, then that's a green light. Anything above 2-to-1 starting out as a base. One last thing on that is, well, to recap what I've said so far. One, make sure you're super clear on your system. If you can't say, here's exactly how my system would have performed, or if I told my wife tomorrow, hey, trade my system, and she could have the exact results that you would have had if you traded your system, then you aren't clear enough on your system. That's what Brian's mentioned that before. He could, especially used to, he could hand his stuff over to his wife, teach her the things that night. The next day she could trade and execute, and her results be super similar, if not the same. So be super clear on that. Two, again, the dynamic has changed between risk reward and win rate in the past, especially past this year and past 3 months. There's been a lot of winners, and the reward on them it's not 3-4R anymore. And so you've got to adapt like that. It's just like, if you're in summer, you wear summer clothes. If you're in winter clothes, if you're in winter, you wear winter clothes. And right now we're in sort of a summer to winter rate. The winter rate's really high on stuff, but the risk reward is more of a winter right now. And so you have to adapt to the seasonality to have a smoother equity curve. The last thing that I should say, people are really way too focused on ads. Lucky and I were talking about this day on a chat. People are so focused on getting like 2 more R, 3 more R out of ads. My ads right now, they're literally giving me like maybe half an R to 1 R extra. Ads, especially right now, see, it's different in 2021 where your ads would give you like 1, 2, 3 R extra. More like 1 or 2. But right now, ads are not giving you a whole lot more R. So quit trying to like bump up your reward a ton with your ads. It should be really pretty minute right now. So that's just a word of advice.
Nice. Yeah, that's a really good point. To highlight basically what Matthew said, when I look at October, I literally had a 2.6 average risk reward, sub 3, and then in November, I did get over 3, but just so like 3.2. So, like, and I'm someone who is adding as well. So it's like the reward is not necessarily there for sure. And it's definitely, it's hard because we want to compare like what was and what is. But right now, yeah, definitely your priority needs to be kind of like on that equity curve. So like I've definitely stepped back my views for the last couple of years. I have started saying more like, well, it doesn't really matter what your stat line is as long as it is profitable. So like if you get that win rate, like you don't need to be like, hey, Brian, is this going to work? Like you can literally see if it will work based on your stats. So like that's the ultimate goal. You can definitely go for, quicker wins and stuff like that. But I think what a really good point was that Matthew made was that he has kind of that minimum criteria of that 2R. So it's like, as long as we can define our system to the point where we know kind of like where we'll take the profit target, then you can kind of give yourself like, hey, this is a quality setup. This is the green light, like he said, or, like, hey, this is not, even I put this trade on, like chances are I'm not even going to get 2R. So like, let's pass on that one. And like that is definitely a good way to just start filtering it in. Definitely, like the whole adding thing is really very overblown. 100% it is. I always want to make sure like that was not the case, but I understand it is one of the most like alluring sort of ideas. But the thing is, like, again, the goal is to be profitable first. We don't get that luxury off the bat. So just make sure that your system, like when I'm talking about adding, I'm talking about like taking a system that already works and just being like, I need to bump in a little bit extra, because it's exactly like how Matthew said. A lot of times it's just an extra R or sometimes less, or maybe even like 2R, things like that. It's really very minimal. And like I mentioned before, the stress level does go up because now you're more committed to the short-term price action, and you don't have like the ability to kind of ride like your advantage, which is a lot of times like with systematic trading, we can kind of get a consistent entry that's going to work, based on our back test. And so when you start reducing stops and things like that, like those aren't necessarily systematic ideas. Back to what Gabriel was saying earlier, is like the turtle traders are really well known for like using R's to add in like specific amounts. So like if it goes a 1R in their favor, for example, like put on this much. But like again, they have a much wider time horizon. You could still utilize the same idea as like, let's say you have no idea of like how to even add into your trade. And it should be a very slow process of, okay, I have my base system. It's winning decent enough. It's profitable. Okay, I've traded it long enough. I understand it. If you want to say, hey, if it goes to R in my favor, I'm going to add in like a certain amount, like half of it, a quarter shares, whatever. Like that's a completely fine place to start, because like you're not really destroying your system so much. Whereas like people see the result of how the trades are now, like for me, how sometimes I'm adding quite a bit, and like, it's the truth is like it took me, hey, I have my base system. Hey, I'm going to add one more time. Hey, I'm going to add one more time after, months and months and months of practicing. So it's not like you can't just go +2 ads without recognizing like what it does to your system. It's going to change like a lot. Okay, Tulik, he says 2 questions. How to deal with burnout. For many months, I've been reading, learning, testing, and trading 12 to 14 hours a day, and reached a point where I have zero energy, even when I get 7 to 8 hours of sleep a night. So with burnout, a lot of the time you have to kind of listen to your body. And when I started working with Kim, she always told me, hey, like slow down, or like is it possible that you could take a day off, things like that. And while I think it's really good to work as much as you are, if your energy is not there, then what I found really helpful personally while I was still on the grind, like let's say I didn't take any days off, what I would do is I'd try to schedule something for myself, like a weekend, for example, where I go do something that completely takes my mind off trading, like go like book a hotel, or like go on a trip, like go on a little road trip, something, or have a nice dinner, things like this. Make a reservation, make time for yourself to regenerate. And that's going to be really helpful to just like reset, because I don't want you to feel guilty. Let's say if it's Saturday or Sunday that you're not hustling, like you can definitely use that time to just stop thinking about the market, find yourself prepared like Sunday night, just reiterate like what you're going to do with your system and whatnot. And like, the thing is, once you've built out the foundation of your system, you shouldn't necessarily need to tweak it every single day of your life. The goal is actually that you don't have to spend as much time on the trading itself, like on the trading work eventually. Basically, like we had a little conversation before where I said, if I go on vacation or I'm off for a certain period of time and I come back, I should be able to trade my system. Like system's not really going anywhere. It's the same thing. I should be able to execute on it, and have been able to execute on it with extended periods of time off. So if your system is executable with time off, then you don't actually need to spend as much time potentially as you think you are. The other thing is, I would say, is like come here and try to verify some of the information that you're like dealing with. So for example, like I'm glad that guy mentioned that he was going to read a book about systems and shit like that, because I can, Matthew mentioned to him, like, look, that's not really going to do you any good. And I 100% agree with that. I mean, like, you read this book, it'll take you a whole Saturday, and you're not going to be any better for it. So best thing you can do is be like, hey, what's up, Brian? I am thinking about, or even just chat, like, I'm thinking about spending, some time working on this aspect of my trading or learning from this material. And chances are someone or myself will be able to say, like, that not so useful, cut you a lot of time, spent figuring it out on your own. I've watched a lot of DVDs. I read a lot of books in the trading field, and like, just because you're keeping busy doesn't mean you're getting the information. Actually, one of the things that I really stress for people, especially in the one-on-one calls, is like, look, dude, you have a system that is going to work. You have a strategy that you understand well enough. You don't need any more information. Like, when we're talking about how to execute, sure, we're going to go down that route, but like, all you need to do is just block everything out at this point. Like, that's where we want to get to. And there's always going to be so much information out there that is not going to be relevant to your actual, improvement. And you don't need it. You don't actually need to do those things. So, don't feel pressured in the way that you are to, keep putting those numbers up, and I want to be there to help you guys cut through that. Like, just real quick, I go talk to my cousin who wants to learn how to trade with my cousin-in-law at like 4th of July or whatever, and like, he's mentioning, yo, I'm watching this, Ricky Gutierrez on YouTube, and I'm like, fuck, man, you're wasting your time. I wish you told me. It's like, even within this small cap space, I've been here a long time. I've seen a lot of shit, and you could be absolutely like just really piling into the wrong kind of information, or not even wrong, but just ill-informed information. And let's say that, let's say, hey, I learned this thing, and you want to have a discussion about it, and like, for whatever reason, I come to say, oh, that actually is pretty good information. Now, then it's the right thing to do. So it's either way, I would just kind of bring it up and like, let's explore what you're actually focusing on. So I think like Mid10 actually made a discussion post actually earlier today, right before this call, and he was like, hey, what do you guys do? What's your trading day extra? Do you look at the stats? What do you do? And I basically wrote up this similar kind of topic there, and I was like, hey, focus on the execution. If you have notes throughout the day, like, that's where you work on it. If you're having a winning day, naturally you're not going to have as much things to learn from. If you have a losing day, that's going to be helpful for, you're probably going to have lots of notes. And you figure out like, okay, well, if there's not that much, there's not that many things that I can improve on today, it's not a problem. Like, you're going to come up with things. Like, just take that time to rest and feel good about the day, whatever. And if you're really, hell bent on like improvement, you just have to understand one thing is, at the beginning, you're going to have so much to improve on and so many things to see, and you will improve like exponentially every single day. Like, oh, I'll make, if it's an XP bar, it's like 50% gain today, in my knowledge, whatever. Like, it's going to be really fast. The more you specialize in something, the more you develop, the less, like, the more time it will take to find that next kind of like improvement. Like, you're going to hit these plateaus, and occasionally you'll hit a plateau where it's like, I don't know what to do anymore, like, to work on. And you have to ask yourself this one question is, how can I do this better? If you just keep reiterating these questions to yourself, how can I do this better? How can I do this better? Eventually you will come to find something. And like, it's a silly kind of premise, but Kim calls it living in the questions. Although I knew this before that I met her. It's like, if I just sat here on a Saturday and I was like, I want to improve something about my trading, I don't know what. I sit there, I look at my Excel, I look at my chart, I say, how can I do this better? Naturally, you ask yourself this a bunch of times, and you'll start seeing things that, like, I've made improvements to my Excel or like my chart that I would have never like actually improved if I didn't sit there and ask that question. So if you feel like it's harder and harder for you to like find the next thing, that's what I would recommend. But don't feel pressure to do so if it's not coming up naturally as well. That's just a like a 1%, improvement kind of idea. Okay, number 2, my trades are from 1 minute to 1 hour max. Lately, I'm trying to hold positions longer for longer moves, small caps, fades, end of day. and I'm watching the screen for hours, bar by bar, to get out big spikes. It's very stressful. How do you deal with it? So, like if you have a really tight stop, there's not a lot you can do about just really walking away too often, but like you have to find opportunities to catch yourself. Like, so for example, I like to play games throughout the day. So I'll have a game up on the side, and each game that I play lasts around like 20 to 25 minutes. And so sometimes like I'll catch myself, being like, "Oh, I literally played 3 games in a row here. That's like an hour. Nothing happened, Nothing happened in this trading plan that needs my attention. I could have been taking a nap." And so like sometimes having a thing like that can help you like be cognizant of what's going on for you. And if you find yourself having that situation, easiest thing to do is set an alert, and it doesn't have to be right next to your stop. Like I like to put it kind of like where I feel is sort of an invalidation point, or like a point of like, oh, if I was watching that, I'd be like, what the fuck's happening? Like I'd want to be looking at that, right? So sometimes that can be, a move like over the prior high, or some level of consolidation, or whatever, like it's reversing far from my price target. That's really helpful. But ultimately, like the confidence is going to come from just the daily review of these charts and the backtesting. You want to be able to look at and be like, okay, well, clearly my system tells me I should be holding it longer. I shouldn't be afraid. I should just accept the trade, like for what it is. It's my stop or my target. And with that in mind, like with the experience that you're gaining day by day, that's going to help you just keep hammering it in. And it's a good thing that you're not there yet. You would be bored. I mean, it sounds like, well, okay, well, if I always held it to my target, then that's a good thing. But I think like the fact that that you can improve on something is really motivating, and also very stressful. But like day by day, when you check your chart, I always basically, as soon as the market closes, I'm screenshotting all my executions, and I'm looking like, okay, where did I cover, and like where was the bottom of this trade, or like where was my price target, etc. And if you're always falling short of that, then we just need to implement some systems like walking away, or we need to just build up more, sample size of seeing this every day and day in and day out. Eventually it will come. It's not a big deal. Okay, BL says never mind, he's good. I think that while we're here, like in the chat, whatever, it's better if we have people coming on the mic, because we can always chat, right? So I think everything was just mostly discussion there. Does anyone else want to come on the mic? And let's get more kind of like personal questions, more personal experiences here. Okay, no bites right now. Okay. All right. Let's get BL on. That is also Brian. Go ahead.
Oh, hear me?
Yeah.
Yeah, so maybe it's not really a question, but like a discussion, and maybe I want to hear your thoughts on you experienced it in terms of execution. So just want to pick a thought on like, hey, like okay, I'm executing in real trades, and then side by side, like maybe on my nightly review and whatnot, we'll kind of like trade it as if I'm backtesting it and come up with like a result. So a result that is according to the system perfectly 100%, and the result that you actually achieved on a day, real-time results. So just accumulating it throughout the years. Of course, you see some deviations and whatnot, right? So you see a deviation so extreme that you cannot just think, oh, maybe this is just a system drawdown, or like something that's not covered in backtesting. It's more like a forward-looking new market environment type of situation now. What's your take that, and how do you kind of like accept that and how to move on or like improve that?
So I'm not sure if I got it like exactly. We're saying like if some sort of deviation
So
based
let's say like
on
you're
the
keeping
market
track
itself.
based on like like let's say you're keeping track of like actual executions versus 100%
Okay.
system. Then it starts to deviate. I won't say it starts to deviate, but then um, what if you start to underperform as too many criteria kind of overwhelms you and whatnot? Like, do you start to like step back, take a look, like what's causing the issue? Is it myself or like the system? And is there ever like a tipping point of you actually like start to like decrease like execution score? You like
Okay.
stuff too many variables for you.
Well, that's assuming. So I'm gonna assume it's either because you added more to your system or the market's just a bit different at the time. If it's dealing with outliers, you have to like what I like to do is basically just reverse engineer anything that kind of went outside my expectation. So if I see like a big move, for example, like way bigger than I thought, then I'm gonna try my best to understand that move, like what were the variables involved in that, and then potentially if I can be aware of that in the future. So sometimes that would have to do with fundamentals or sometimes some news event, like you mentioned, and in those cases, you basically just want to like not waste the opportunity to take note of those things and just keep it in your mind or like somewhere that you can recall if that ever happens again. If it's like truly an outlier and there wasn't really much about it that you can define, then I would basically just kind of put that onto a list that I can backtest at a future point. So I kind of like to personally I like to collect outliers just because I want to know like how much of an outlier really is and if potentially like I could optimize for it. You never really want to optimize for outliers just because like it's going to hurt your overall performance and like these things do happen. If your actual execution is just suffering because something fundamentally changed, I would just say, you have it could potentially have to do with your just understanding of the overall cycles and everything like that, because those will have an impact on the patterns, and being aware of that will just help you be prepared for like when things do change like fundamentally. But you also have to recognize things they don't like most of the time it's not going to change permanently. So it's not like what you're doing is worthless, but similar to kind of what Matthew brought up, it's like if you start noticing the reward is not really there, then like you may have to adjust, or vice versa. If the reward is there, then you may have to adjust as well. So that's just my take. Basically, like I'll give you a real simple example. I think I've used it before, but like I was incorporating pretty decent amount of longs into my trading recently, and once kind of the market started to be really bearish, lots of news catalysts or like even trade structural like low float, etc., like bad short, this is a bad short kind of opportunities, we're still fading, right? So when I see that, it doesn't make me think, oh, I need to like invalidate my long strategy. It's more of like, okay, I need to think about what cycle I'm in and why. I've tried it, it's not working. I'm not going to force it. I'm going to wait for the market to kind of prove what I'm doing it would work. And so like you'll probably see that with a lot of traders who didn't see much after hours action, and all of a sudden we have this RMED and SMMT, and that might play into their strategy that worked half a year ago or whatever, and it's just the market is going to it's going to participate in these cycles, and you don't even necessarily need to be aware of it. You just have to be kind of thinking about what you're seeing on the day to day. Like, oh, I see extreme weakness day in and day out. the chances of the next day being weak is also very high. So just kind of keep with the trend of like what's going on in the price action, and you'll be way more informed than just kind of like saying, hey, I have the system, it's not working right now, or it's not performing well, and that losing your faith, because like the market, at least in my opinion, is very like, it's more than cyclical. It's like there are patterns that just appear, between each, ticker on that certain day or week. Like they're just trends in behavior, and you just have to pick up on that, and it's super easy if you're just paying attention to how the charts look and the price action, stuff like that. Eventually you'll be able to piece that together. Let's get
So assuming,
okay.
sorry,
Yeah.
okay, no, I'll make time for other people.
No, go ahead. I didn't know if that was
I was just gonna say, I was just gonna ask, like, so did you switch off your long system?
Yeah, I
Assuming
said
that like the drawdown is not, it hasn't exceeded what you have back tested in terms of drawdown.
I don't even
So
need a
from your
drawdown.
observation and whatnot,
I
it's
don't need a
like
drawdown
turn
because
it
I'm
off.
looking at it. I'm like, hey, this stock's literally 1 million float. There's no dilution, and that faded, right? I mean, order's good news. I mean, that to me, I already know it's enough red flags to not be a short that I would be willing to take a long. But if it still dies anyway, then at the next time I feel myself want to go long, I'll give you actually what happened. So I'll be like, okay, I'm gonna long this. Okay, it doesn't work. Shit, what the fuck? And then I long the next one, and it doesn't work. So then the next time I'm thinking of going long, I say, Brian, in your review, you noted like every time it looks like a good long, it's just not working. Let's not be long. So it's just not long right now. That's all I need to know. And if, for example, like I missed that trade and it works, then I'll be like, okay, next time I'll do it again. Next time I will long. So I'm just kind of waiting for that to turn back on. And if it's not, I've already been proven enough that it doesn't work.
That makes sense.
Okay, let's go with so it seems like I think we'll just skip over to Michael, just give him a chance. We'll have Michael Good come in.
Thanks.
If he's here, we'll see. All right, whenever Michael's back, we'll just have him hop in. And I think that will be the last one as well. So I definitely want to hear what he has to say as well. Matthew says you have to open your, in poker terms, range of hands so short. Yeah, I think that's actually pretty relevant. I think, a lot of you guys know range, some of you don't. I'm poker noob, but at least I know this concept is like there's a range of acceptable hands that you'll basically play, right? So you're talking about like using aces or pairs or whatever to a certain degree, but like the moment you see like a shitty offsuit like 4 and 6 or whatever, like you're gonna never play that basically. When a market is showing you like the weak hands or the hands that you typically wouldn't play are still working, you can open your range up a bit and accept more shitty trades. And vice versa, if it's like there's so few good hands, everything else is just noise, and you just reduce that range. And I think that is applicable to trading. And that's also something that I definitely like. I think I do that somewhat intuitively, but it is true when you see. It's like if you see every single day, things are just popping and dropping, right? There's no reason not to take advantage of that if you can. But ideally, you are like baking that into some sort of system as well. Like you could see a short-term pattern that you want to take advantage of that you didn't. And I'll give you kind of an example. So like I take some days off, right? And Monday was one of them. So I took off Monday And by the time I was reviewing the day, I saw like, well, there was like these lower volume Chinese gaps that had like no volume, and at the open they basically just died, right? I know there was like an overall Chinese move, but basically I'm seeing something happening. Like, it's not just one ticker, it's 2-3 tickers. So essentially, like, for that Tuesday, I'm thinking to myself, pay attention to those trades if you see that similar price action. And the way that, and then I literally built a system in case that trade happens. So for me, I was thinking to myself, like, because they don't trade volume, I don't necessarily want to be involved in that pre-market. It's very liquid. But I noticed, like, when they're weak off the gate, like, they're breaking kind of the pre-market range. So like, if I put a trigger order at the bottom of that range that fills, then it will automatically, put me in short, and then I'll have a piece of that trade if it does happen. So because, like, the system itself plays out very similarly to what I'm doing. It's just a matter of, like, the characteristic of it was like pretty unique in like a very like it seemed like very cyclical. Like, that's not typical, but when it happened in multiple tickers, so I have to be prepared for the week ahead in case I want to capture the opportunity. Else, I would say to myself, like, that trade itself, I would never take that because I don't have a way of capturing that, like, systematically. If your thing is like, oh, I see that, and tomorrow I'm gonna just hop right in just because, then that's a little different than, like, hey, I know how I'm gonna get into that trade. I know how it has similar characteristics to, like, what I'm looking for, and I want to capture that move, and I see the pattern, and I'm prepared for it. Like, it's completely different. So sometimes you have to, like, acknowledge what's going on and just kind of adapt if you have kind of the mind for that, because, like, this, it's all under the same umbrella, right? Like, when I look at the trading market, I'm looking at myself more as, like, hey, I'm mean reverting these trades, and so, like, these trades are under that umbrella despite having different type of price action. So as long as you kind of have the skill set for, like, those umbrella terms, umbrella types of styles, you should be able to adapt when necessary. Like, someone who, let's say, focuses on mean reversion long, they would just be looking for, like, a huge dip or huge crack, right? And then they'd be looking to kind of pull that back to the average. And so it doesn't matter if that happens on futures, it doesn't matter if that happens on the SPY, it doesn't matter if it happens on the small caps. Like, they can trade those things the same if they see those patterns happening, because they already have, like, a methodology for the overall strategy, and all they have to do is just tweak their, like, the criteria for getting in and out dependent on, like, what they're trading. So you can do the same thing in this market. Hopefully that makes sense. Like, you don't want to limit yourself so much that, like, your criteria is, like, so specific that you end up just, like, going in the chat and crying that you missed it. Like a Chow, right? Like, yesterday's a perfect example. He's like, hey, how do you guys deal with, I see this trade always going against, like, it's so fast, like, how I capture that move. See that move, acknowledge you want to capture it, and create a system that captures it. That's the deal. Like, there's no hindsight. If you create a system for something and you don't hit it, then there's nothing to regret, because literally you would never have caught that move. So, it's like, if you see something that you want to take advantage of, make that happen. That's basically it. And if that ever, if it doesn't show up, like that whole plan I made from Monday, I didn't see anything happen like that the whole week. So I just have it kind of there, and it's probably not going to play out, but at least I was prepared. You know, I took the time to prepare for a move I want to take advantage of. And it doesn't take that much time. That idea took me maybe like 10 minutes or less. I think maybe like 3 minutes. Okay, so that's basically, I think we ran out of juice here. I will put the recording for you guys in case you want to rewatch. And yeah, good job, you guys. Glad to see everyone hustling. You are literally the 1% of a 1%, which is really hard to believe. But I will say, speaking to a lot of people one-on-one, I've seen a lot of improvement, like to the point where it's like, hey, just trade it. They're basically saying, we go in week 1, it's either like, hey, you have something here, just keep trading that, or here's a couple tweaks, or like someone comes in, oh, that's completely, here's XXX that you need to do. They come back the next time, they've already done it. Now it's like, hey, just trade that. Don't think about too hard. You don't need that much more. And that's basically the point that a lot of people are getting to. So that's always good to see. All right, guys. Have a good close of this trading week.